Hello everyone, this is the Market Recap with Jake Pelly. As always, here's a fun disclaimer. As this is not a live show, you can always pause and come back and read this at your leisure. Today we're going to recap the market and some of the movers ahead. As always, it's going to be a little quick update here. Today we're going to go look at the SPY, the USO, and Apple. And then we're going to talk about news that came out today that could be driving some events, and news tomorrow that could come out and drive the market. As this is Friday edition, we're going to talk about news that will come out Monday. So let's get right to it. As you can see here, this chart of the S&P 500, we're still in a slightly bullish trend here, hitting it from the lows. We can see it. We have yet to cross above this 2100 and hold it. 210, and if we do, it looks like that 213 will be retesting that, making new highs into the market. We can see that going back into the last time we've hit in this area, we hit in these sideways trends. We hit new highs, got close to repeating it over here last year around the same time in April, going into May, and we can see we moved back up, failed, broke back down to the 204, recrossed above it, and then we had the China movement down. Now April's typically a bullish time of the year, and Friday we kind of fell flat on the S&P 500. Quite an inside day today, went from 208 to 2901 to 2583, closing up at 209. Not quite hitting above 210, but we did close above 290. It was an inside day, meaning that we kind of ended flat for the day, not quite up, not quite down, but mainly flat. We can see here at the moving averages here, the 50 did cross above the 200-day moving average, which being the 200-day average, and typically that is a sign of a bullish move. Stochastics of the 21-day stochastics say we are slightly overbought here, and MACD is slowing down in velocity, as you can see here. Not one particular move to the up or down side here, kind of sideways action again in the MACD. We do have earnings coming out next week, so that should be interesting, but today we're kind of living the aftermath of the tech sector going down. We had Google, Microsoft, Starbucks, Visa, and Schlumberger all missing their estimations, so that drove the market down a little bit today, but as you can see, the S&P 500 recovered slightly. If we go look at the QQQs, we can see that it had a particularly down day today on the QQQs, which is the NASDAQ ETF. As you can see, the 50 has not quite crossed above the 200-day moving average, but it looks to be headed that way. So we'll see where it goes from here. Stochastics, again, kind of anemic. It does have some downward bias, but that's because of the miss in the earnings yesterday. And we have Stochastics saying we are slightly more overbought than oversold. So just something to keep in mind and think about. Going to USO, which is the commodity oil ETF, which tracks a couple different oils. We can see that the 200-day moving average is still well above the 50-day moving average. If we were to cross above here and hold above the $11 here, as we can see, we keep hitting this head and bouncing off of, but if we cross above here, it looks to be a slightly more bullish trend. As you can see, MACD is a little bit more strength in the movement as we have compared to the rest of the indexes. If we were to cross above this 11, we can see here at the next stopping area would be about 1156. As we move into these sideways trends here, and maybe this area right here at 1018 will become support. Now API did come out. We still have an oil inventory build up. We still have production at an all-time high for most OPEC states, Russia. A lot of South America companies are also pushing out as much oil as they can, so we still have a supply problem. We are still awash in oil, and supply and demand's a little bit off, so just keep that in mind. but we are retesting this, and we'll see Monday if we cross above. If we do cross above Monday, well, it could be off to the races here at 11.50. It might be wise to start locking in some profit, maybe cash flowing it as in selling some covered calls against it and locking in some gains. Moving on to Apple. Apple had a sympathetic move with the rest of the market here. You can see earnings miss, but Apple Moon closed mostly above today. It was down a little bit today, and then it's closed right here. We can still see we're in this sideways trend here, and if we hold above 104, as you can see here, let's get my mouse. If we can hold above 104, we'll mostly likely be moving inside this trend here as we go into earnings and having a resistance point of 107 followed by 108. And if we cross above 108, we can see right here in this sideways trend area that 110 and 108 would be the new area. But if we cross down below here, we can see that 103 and 100 would be the next sideways actions here with the short-term support of 103, and if we cross below that, well, we'll be going back into this sideways action here. MACD is a little bit stronger here, as we can see. MACD is moving more towards the bears. We are in an oversold area for Apple if we compare to stochastics for the last 21 days. Apple does have earnings next week on Tuesday. It was Monday, but they moved it because a memorial for one of their creators. And if we go and look at news for today, we had that PMI manufacturing index flash for today came down, and that is the early indications that Apple factory conditions are no better than mixed strength with Empire State reported. So the PMI is a little bit worse than expected, so that should be a little bit more into the market, but PMI index flash is just an orange star, yellow star, so it's not really a market mover. If we go into next week, we can see going into Monday, anything to expect. We have new home sales, what typically is a red star VIT followed by the Dallas Fed survey. We don't have any Feds speaking that, but we do have Feds coming out Wednesday, so just keep that in mind. And we have Apple coming out Tuesday. Moving back here into, there we are. Moving back here, we'll go check out one more index. We'll look at the IWM. We can see the IWM that we still have the 200-day right here, well above the 50-day, but the 50-day is moving in velocity. We can see that the MACD here has shown a little bit more signs of strength. It's not the same anemia that we had into the S&P 500, the QQQs. And we can see we're moving back into this sideways channel. We got to the 200-day moving average, we bounced above it, and we're looking to test this sideways action here. If we go and we make this so everyone can see it, we can see we cross back above here, so most likely we're moving back into this channel here around 115 and 113 being support. That'll be interesting to see if we break below support. If we do, we'll be looking more at a 111. Again, typically April is a very bullish month. Typically, we can see that we don't have the big strength of moves that we had in the MACD. We kind of these are little anemia moves here, and so we'll see moving into next week what happens. As always, this is Jake Pilling. This has been a market recap brought to you by Wall Street AO. As always, trade safe, and I'll talk to you tomorrow.